I've gotten a few questions lately about the fuel gauges, so I want to review their performance for the past 6 months and discuss these issues so that everyone's clear about exactly how they work. Now, the idea is quite simple that when a fuel gauge is high, it means the potential upside of the market is high, and when it's low, you have a much lower chance of making any money being long. So this is the S&P 500. You can see when it gets above my kind of threshold here of 60, then I'm in a buy zone. Now I could wait then for an oversold reading, or you can wait for your fundamental view to coincide with the gauge. Maybe it never does, but once you buy it, you would logically include a trailing stop of some kind. Now keep in mind there's no technical analysis in these models, in these gauges. They do not include an overbought, oversold reading. There's no support resistance or trend line considerations. So if you want to include that, if you believe in technical analysis, then it's logical to put them together, but this is not a technical indicator. Now, before Brexit, you got lots of buy readings. Now you've got to have a stop in the event that something crazy happens on Brexit night, which it did. But you'll see that right after that, you've got nothing but ongoing buy readings. And so you would have been long, and you put in a trailing stop, and you would have captured the entire rally. In the case of the US election, you got nothing but buy readings. Again, you've got to have a stop on the day of the election. But right after the election, you continue to have buy levels. You would have bought the market and held the market, and you would have captured the entire move. Here's the US bond market. Same idea. You wait for high readings. In this case, the gauge is more volatile than the S&P gauge. So you're waiting for readings that are higher than 60. Often something like a 90 is a more appropriate level. You can match it up with an oversold reading. You can wait for a breakout, whatever your approach is, or wait for your view on the Fed. You then buy it, and you put a trailing stop in, and you captured the move. You can tighten your stop if the gauge falls down to, in this case, 0. So it's mostly bullish in this area, not so bullish in these levels are not particularly bullish for bonds. So you're really waiting for readings like this, which came on that day, and that would have been fine. And then the gauge collapses and you tighten your stop. So you don't get hit with all of this. So then you wake up and you find that on this day here, which begins there, you can buy it. Now you wait for it to be oversold, which it is, and you could buy it there or the next day, whatever suits. And when you buy it, you put in a trailing stop and you capture this. That's the goal. That's a big move. That's a 3% move in the bond market. 10-year notes. And you can tighten your stop again because the gauge hits 0. So now we have a buy again on bonds. Now risk parity I happen to like because it balances a long bond and stock position. So you wait for the level to get very high, which it did here. You can match it up with your own view of markets in general, and you get long, and you can capture quite substantial moves. That's a 10% move where you don't have to worry about overnight news because you're long bonds and stocks at the same time, and bonds act in a sense like puts on your long S&P position. Now, when you get the gauge down in these levels, the market should begin to waver, which is what it did. But then you wake up and you find you have a beautifully high set of readings like this. The market becomes oversold. Maybe you're in too early. Maybe you add to it here. But the idea is that once you get in, you put in a trailing stop, and again, you capture something like a 10% move, 8% move. Those are two very big moves in the last 6 months that would have made your year. So it's very straightforward. It doesn't include technical analysis. You can wait opportunistically for when the readings are high. You can tighten your stops when the readings are low, or you can have it match up with your own fundamental view.